behalf of Crosscheck Media and BizTalk Today TV, welcome everyone to BTT's special report on the war in Iran. We are wall-to-wall coverage all day today. We are bringing you the experts covering everything from policy to government to military, trading, and obviously energy. With me right now is Fernando Valle. He is the managing director of energy at Hedgeye. Fernando, welcome to the program. Let's just kick it off right now. You have West Texas Intermediate up 8 to 10% in pre-market trading this morning alone. And now you have all the big oil companies that are also rallying as well on this news. Is this just simple supply disruption concerns, or is there a pure geopolitical risk premium built in?
Todd, I think the answer is both. If you look at oil prices were up around $7 a barrel year to date, which hints to the geopolitical premium that you're talking about, which ultimately came to pass with Iran being attacked over this weekend. And now there is some disruption that's already happening in the Strait of Hormuz. Again, important to notice, it's not a closure. We don't expect the strait to be closed, but there is a disruption. First, because of the attacks, and ships just either U-turned or stood still so that they could ensure they weren't going to be hit. But secondly, now it's an insurance issue. Can they get the insurance to traffic in that region? We'll see how I expect at least a 1 to 2 week impact here on output. And that's obviously leading oil prices higher, as you mentioned. So for that disruption. Important to notice, there is exposure in the public markets to that disruption. For example, Qatar Energies mentioned that they closed down their LNG facilities for some time. Exxon, Shell, ConocoPhillips, Total Energies all have exposure to Qatar Energy, so they will lose some revenue from that shutdown.
So, with that loss of revenue, though, how does that explain why stocks like Exxon, ConocoPhillips, Chevron, they're shooting higher? I mean, you have Exxon is just blown right past that 52-week high right now. Pre-market trading up over 160 a share. I mean, is there really a concern there that there is a loss of revenue? Because it seems like those companies are just immune from this.
Well, yeah, because the other parts of their portfolio will benefit more. So what I mean by this is they're still going to be net gainers because all of Exxon's production in Guyana or in West Texas, they all are going to get re-rated higher with oil prices now up 13, $14 versus the start of the year. But when you look at a pure play like a Diamondback or a Matador, those names don't have that exposure to the Middle East. They're purely gaining. And then you have the other factor, which is they have usually higher leverage in the case of both Diamondback and Matador, which helps in these pop-ups as well. And then secondarily, they have more marginal assets. Marginal assets are assets that may not work at $60, but now at $80 Brent, they work. And there's no better return than when something goes from zero to something. That's an infinite return right there. So these more marginal players and higher leverage players have an outsized benefit versus an Exxon, for example.
Fernando, you once told me that the Iranians don't want to close the Strait of Hormuz because it would hurt them so much on the economic side. But we're seeing that now. Are the Iranians closing this, or are we closing it and trying to really interrupt supplies going to China?
So the answer is neither. Neither of us is closing it. It's insurance and then just the ships themselves looking for protection against debris and just stray shots that may come across. So there was a period when no ships were crossing, but now there is some crossings happening. Iran has come out and said we do not intend to close the Strait of Hormuz. We're just closing it to American ships which means to no one, because other than military ships, no U.S. ships really go through the Strait of Hormuz.
Yeah.
There are very few American flagged ships to begin with in the tanker markets. And they're usually all here in the U.S. So it doesn't, as you said, there's no benefit for them. The U.S. also has not hit Iran's export facility, Karg Island. So there is some concern here about not creating long-term harm to energy markets.
So Carg Island, obviously a gigantic asset for Iran. So what happens going forward though? They don't have leadership in Iran. I mean, it seems like that part of the oil market is in disarray. I mean, where do you see what's the short-term view on who takes control of those oil fields?
Well, so far it's the IRGC, the Iranian Revolutionary Guard, will continue to operate those facilities, but that's the billion dollar, if not trillion dollar question. Um, there is there's going to be a power vacuum in Iran. Who takes over from there? Even the best political analyst I've seen doesn't seem to have a clear answer. If it's the grandson of the Shah, or if it's a new emerging non extreme leadership, internal leadership. Iran has been subduing their opposition for so long. There's no clear successor here. Even the new Ayatollah, as I found out, has just been killed again. So the four Khamenei was killed, and then Azafi was killed a day into the job. So it's definitely not a job that people are rushing to take right now.
Yeah, not a long line of applicants, that's for sure. So I woke up this morning, I got a ton of text messages from different traders telling me that they're hearing that oil is likely going to hit $100. We're going to cross over 100. Is that realistic though? Do you think we're going to see that type of elevated price?
Short answer, no. And I'll tell you a couple reasons for that. The first one and the biggest one is if you had noticed over the past several months, China had increased their imports of oil. They have a very significant strategic reserve that they will deploy to mute some of these increases. Uh, some speculation says as much as 1 billion barrels of strategic reserves. We don't know. A lot of that is underground. It's a hotly debated topic. Second, I don't think this is going to be a multi-month disruption. Again, clear indications that from Iran that they don't want to close the Strait of Hormuz. From the U.S. and Israel that they're not attacking Karg Island. Those are clear signs that they are cognizant of the impact to energy markets if either of those were to happen. And then the third part is there will be a supply response, which will be more clear in 3 months and even more so in 6 months. So if you go through the US E&Ps and their quarterly earnings over the past 2 quarters, they've all been saying we're moderating capex, we're getting more efficient, we're doing more with less, but we're moderating capex. That was with WTI at 58 to $62. Now we're close to 75. Will they ramp up that spending and will we see higher and higher production? Again, it's not immediate, although US shale is short term, you're not going to get a production response within a week, but you can get it in 3 months. You can get it an even bigger one in 6 months. And I fully expect to see some supply response here if oil prices remain above 75 for the next month. And the very high side, I find very unlikely because, again, China will start deploying some of those reserves to tamper down prices. Uh, bar if there is a strike on Clark Island, or if a large tanker goes up in flame, or a hit on Saudi infrastructure, then all bets are off. But as it stands today, all signs indicate that we're not getting to 100, high 80s, 90s possibly, but I think that China and the US will fight to keep that price more contained.
As crazy as it seems, do you believe that the Iranians will sabotage their own oil and their own oil distribution outlet?
No, that would cut off any help that they could get from the Chinese, who are the only buyers for their oil, and that would essentially drain them of all cash. And if they don't have cash to pay their soldiers in an already floundering leadership position, then they'll flounder all that much faster. What could happen, and this is that different factions within Iran could start fighting for control of the oil fields. And if that happened in Libya, that happened in Iraq, that happened in Syria, and that led to production declines because it does require ongoing maintenance, ongoing spending, and a peace in order to keep those oil flowing.
Right, right. And final question for you. Do you think OPEC can do anything right now? Because it seems like with the Iranians, they're bombing the Saudis, or they're bombing facilities there. Can OPEC do anything with supply or anything like that we should be thinking about?
So if you think of most of OPEC's supply, Kuwait, Iraq, Saudi, Bahrain, UAE, those are all producers that go through the Strait of Hormuz. The only one of those that has an option to ship elsewhere and it's limited is Saudi. And they can divert some of their production to the Red Sea, but it's limited. So increasing production from OPEC in this case doesn't solve the issue of the Strait of Hormuz. What can be done is backstopping the insurance side. So Saudi, UAE, Kuwait, or even the US for that matter, have the balance sheet to backstop insurance, at least temporarily, on these ships to keep oil flowing. Oil and natural gas, I should say. Natural gas also very big. Qatar, the second largest exporter of liquefied natural gas after the US, also in the Strait of Hormuz. So they could do that. And China as well, to keep oil flowing. And so it will be an additional cost. It means that risk premium potentially is higher. It's more of a transportation premium at that point, but tied to geopoliticals. Um, but yeah, I don't think OPEC can increase production to get out of this. Russia obviously has its own issues. If they could raise production, they would. But again, limited scope there to add volumes.
And in your final opinion here, do you believe that because of oil and where we stand and being the number one commodity on the planet, will any type of disruption, will this pull the Chinese into this war?
No, I don't think they'll be pulled into it, but they are, I think, in a way, this is reminiscent of the Cold War where Venezuela, Cuba, Iran, Russia, these are all tactical moves by the US against China, I think, much more so than against the Middle East or against Venezuela. Um, if the US can bring Iran within its sphere of influence, as it has done with the Gulf, Gulf, um, the GCC countries, if they can add Iran, that adds significant production of oil and natural gas that will be critical in the AI race. So Iran shares the largest gas field in the world, the North Field with Qatar, and they're also disenfranchising Qatar without Iran. So it creates a significant influence for the US in the Middle East that moves them away from China, which has seemed to be the goal of this administration for a while now.
Right, right. I got to tell you, Fernando, I appreciate you joining me today and breaking it all down, because I know we're going to have you back again. If this war goes on, like the president said, could go on for a few weeks, we'll definitely have to talk some more, because oil is definitely going to be fluctuating. What a way to start March, I'll tell you that. But I
What a way to
appreciate you
start the
joining me.
year. A lot of bad guys have gone down.
Yeah, that's true. A lot of bad guys did go down. You're absolutely right. And how that plays out for the price of crude, that's another story too. So we'll talk about that later. But Fernando, thank you for joining me today, and we definitely will have you back again. So on behalf of Fernando Valle, I am Todd Schoenberger. Thank you once again for joining us on this special report from BTT on the war in Iran. Coming up at the top of the hour, we have Jake Novak. He is with WABC Radio in New York City. He's going to really give us the inside baseball look of what's going on in Israel right now with their government, what they're thinking, and how they're going to gauge success in this war. You will not want to miss that live segment coming up at 10 o'clock. Until then, take care.
Access real-time data and intelligent analytics exactly when you need them. Get the right data at the right time. Learn more at quotemedia.com.
There's more happening behind the headlines, and you deserve the full story. At Biz Talk Today TV, we break down investing, government moves, entertainment business, and even sports gambling, all in one place. Real conversations, smart insights, content that helps you think smarter and stay ahead. Thousands are tuning in. Don't miss what's next. Subscribe now to Biz Talk Today TV on YouTube and join the conversation shaping the future.
We're the economic modern family, watch the flow. Market vibes tell you where the trends might go. We're the economic fam, guiding the scene. From the streets to the screens to your trading machine. Tap in, stay tuned, feel the beat line, cause the market tells a story through the family.